Good day, Divergence traders. Today is September 20th. FOMC day today. Jeez, I don't know where the last half an hour to hour went. I was sitting here in my chair sleeping. Yeah, because there's nothing happening here. Anyway, I just saw this trade like 2 minutes ago. Not that I would have done it. Today is FOMC day, and after you see them, they spiked it down here. They brought it back up almost to a higher high, and then they smacked it back down again. So anyway, there was a trade here, and I'll show it to you, but I wouldn't have done it. It's basically a double top right there. Very ugly, how would you say? You know, it don't look too good down here, right? Let's see, it'd be from here. Okay, yeah. I overdid that a little bit. But anyway, there. So you would have got short right in here. Somewhere in there. And how much did we go down? 183 ticks. So there's your trade with that. Now, this right here, higher close, down it goes, right? Now, these three candles here, they're not closing up in here. They're not up in here. They still close lower, see? The only candle that came back up into the zone was this one. But you see how it closed above the moving averages? Never would have done the trade. Once again, higher close, low it, down it goes. Another one closing above the moving averages. Never would have shorted it here, even though it worked out. Now this one, okay? This one is the one where I would have shorted it and done it, but as you can see, you had the main pivot close by, and you only had a potential of, not many ticks. So would you want to do that? Would you want to sell it from here? Let's see, what did it give you? A max potential? Oh, 84 ticks. Okay. So that one was okay. Yeah, it doesn't always have to be a divergence setup because I trade 3 different entry criterias. And the first one, the main one, the best one is divergence. So that would have been that trade up here. Then I also trade crossovers depending what the price bounced off of. Okay. Here's the crossover right here, down. But see, as you can see, they took it off major resistance and it came down. So that would have been a valid trade to sell right there. That's the second entry I do. And the third entry I do is the higher close and down it goes kind of entries. So it's, you got to find a few different ways to, to clarify and verify that, do I want to do this trade? Well, you got to have a reason to do the trade. No reason? Well, what you going to do? You're going to lose. If you have no reason to get in the trade, you need a reason, you need a plan, you need to scope it out and check it out. Anyway, I got a good question yesterday from one of my students, and she asked, what's the best days to trade? And I said, well, basically Tuesday, Wednesday, and Thursday. Okay, think of it like a car factory that's making cars. Okay, would you like your car to be made on a Monday or a Friday Or would you rather it be made on a Wednesday? Let me explain that. So, I used to work in factories, car part factories, transmission lines. And that's all I'll say about that company. But anyway, so you have people coming into work on Monday, right? They're still tired. They haven't woke up yet. Some of them are still hungover from Saturday night. You know what I'm saying? And they're not going to do the best of work on your car. Now, Tuesday, it's a little bit better. You know, they're starting to get with the ball. Their hangover is almost gone. You know, they're awake. They're ready to put your car, together in a much better way than on Monday. And then on Wednesday, oh, that is the best day to get your car made. Doesn't mean it's the best day to trade, but best day to get your car made. And Thursday, it's a pretty good day too, but they might be rushing a little bit, because all that they can think about is, oh, Friday's tomorrow, Friday, party time, woohoo, And yeah, you definitely don't want to get your car made on a Friday because, they're in a rush to put it together because they're in a rush. They want to get the hell out of there. They want to get paid and they want to go party. Yeah. That's why it's not good to trade on Mondays and Fridays. But Tuesday, Wednesday, Thursday? Oh, yeah. Okay. All right. We covered that well. Okay, Lindsay? Okay. Let's keep going. So anyway, I told you about all my 3 entries and everything here. Let's move on now to the 2 minutes. What do we have here? Well, we had divergence here. We had a high retracement, higher high. And yeah, it was divergent, but was I willing to take the trade? No. No, I don't really like to trade on an FOMC day because all this weird stuff happens in the morning before they start saying whatever they're going to start saying in the FOMC. So anyway, even though today it was pretty much normal except for this right here, the open, right? Very dangerous. They just shot it down, so quickly. They shot down the price this quick, and then they brought it back up again. So there was divergence to get in there if you wanted to, and the trade would have been right there on the close of this candle or the opening. Yeah, the opening. You would have sold it, and down it goes. And the potential on that was pretty good, actually, 228 ticks. But also, during that downward movement, we had a higher close, down it goes, higher close. See, this one qualifies, see, because it's in the zone still. It's not closing above both moving averages. So yes, you could have sold it right there and down it goes. It was a nice winner. And then even the next one right here, higher close, down it goes. Okay, but after that, I'd leave it alone because you have 1, 2, 3 of them. It usually works good for the first one. It's very high probability to sell it from a higher close, down it goes. Second one works, a little bit less, but this one worked. Third one, it's starting to get iffy. You don't know for sure, but it did work for a little bit. Okay, then they changed trend again right here, and they didn't take it up here. Instead, they smacked it down. See, here's one. It does not qualify. Okay, they closed above the moving averages. You don't want it to do that because a lot of the times when it closes above them, it keeps going up. Or if it closes below them, it keeps going down. Okay? So you only want to do the ones where they close in below the moving averages or in the zone of the moving averages. Okay? Okay. So there's a trade right here, low and lower low. I'll draw it on. Okay. Just like that. I'm not giving this as a trade. I'm not a financial advisor. I'm just saying this is the setup for it to go higher. If it will. Don't know if it will for sure. Because trading's pretty much over now. It's 11:13. You got to do it in the first hour and a half from 9:30 to 11. You know, 11, you're pushing it over here. And today's FOMC. Okay, let's move on now to the S and the P. This is the 5-minute. Let me widen the chart. Very choppy, very ugly, as you can see. I don't even see a setup. Well, no, there's the same setup. It's up here, double top. But, yeah. Double top. So, right here was your entry. Right here. Right here. I can see it. See this candle closing down here and it crossing down. So you would have sold it here. And your max potential was 26 ticks. And that's it. And ever since then, look what it's doing. Chopping. Oh, oil's going up nicely. I knew it. I'm long oil, long term. Yes. Okay. Yeah, it's looking ugly. That's divergent there, though. Divergence. Mode Z. Right here. Double bottom. Entry was right there. Want to see the arrow? I can put the arrow on right there. See if that will go up, right? I'm not giving a trade signal here. This is just a setup of the divergence. I am not a financial advisor. I have to say that. You know, I'm not going to go as far and saying, oh, don't listen to what I say. Don't follow my trades. I'm just a stupid idiot on YouTube. No, I'm not going to say I'm a stupid idiot because I don't believe I'm a stupid idiot. But other people do say those kind of things. I don't. Okay? Also, you'll never hear on my channel about, not that I got anything, you know, against other people who are doing it, but you will not hear me talk about promoting the props. Let's just call them the props. Okay? That's all I'm going to say. Because I don't believe in it. And that's it. I think you'll do better with your own live account, your own live money, where you take responsibility for your emotions. If you're trading, you know, a prop, then are you really taking, you know, responsibility for your emotions? No, you're not. So it's like you're trading on a simulator. Whether you want to realize it or not, because a lot of people don't realize this, that they actually believe what the props are telling them, that they're going to put them on a real live, you know, deal and whatever, and it's bullshit. It's all simulation. All simulation. Anyway, that's all I'm going to say about that. I know some people get mad when I say things like this, but I'm just telling you the reality. I think you'll do better with your own, you know, live account. And just think, you don't have to follow all those crazy rules. Oh, yeah. Holy shit. Look at this. Look at this. This is the S and the P on the 2-minute chart. Look at that chop. I'm not going to draw on that, am I? Nah. I couldn't be bothered. It's just a mess. And there's a reason that there's a mess. It's the FOMC news today. So you got players getting out and you know, getting to a more level playing field where if it goes the wrong way, like 400 points, they're not on the wrong side of it. You know what I mean? That's why you see this shit right here. And over here, look at it, look at it. Chop shop, man. Chop shop. Okay? Okay. Let's look at the pound. Oh, wow. Okay. Double bottom right here. This is in the UK session, but I want to show the trade because the British pound, where does it trade from? It trades in the UK in the morning in England, right? Yeah, so we just draw it on there like that. Close enough. It's a double bottom, man. Anybody can see that. And doesn't mean you would have had to take the trade, right? It's a double bottom divergence until you see this candle closing right here. See? This is a 5-minute chart, okay? See that up there? 5-minute? Okay. So, yeah, if it didn't work out, it wouldn't have went up here, right? Right. So it was working out, so right here you would have entered. Plain and simple. You know, you got to let it prove it to you. And my system is, it's a prove it to you first before you enter trading system. Okay? That's why I have the moving averages on there. That's why you always see my entries, okay, will happen after price passes the moving averages and closes above the moving averages in a buy or below the moving averages in a sell. Okay, so that's where you would have got in right here, and our max point potential from right there is 26 points. Okay, now I'll put that there like that. There was a trade up here, and I'll show you, and it didn't do much. It's right here, a high, a retracement, and higher highs. See that? But you won't enter the trade until the 5. Here, let me make that bigger. But the entry of the trade is you will not enter until you get the 5 crossing down below the 7. Did it cross here? No. Did it cross here? No. It crossed over here. Okay? So you would have got short. Oh, I put the wrong one. Hold on. This is basically a losing trade here, what I'm showing you here right now. Things don't always work, you know, like you hope and want it to. Yeah, so it only went down like 9 points. See that? It's a joke. Okay, I'm going to delete that. Now, our next trade was good. Let me show you. It's from right here. Yeah, we'll just draw it to the first pullback right there. Okay. No, you don't have to draw it down to here. You can if you want, but you don't have to. And this goes up here like this. Okay. And our trade was way over here. Where was it? Oh, it was here first, right here. So you would have bought here. And your max point potential on that was 42 points on the pound, which was a good trade. And if you didn't enter here and you just said, oh, I start at 8 o'clock, this is 8 o'clock, the US session right here. So you would have got in here a little bit higher, and up it goes. It was a good trade. And if you missed that entry and that entry, okay, your next trade was right here. Lower close, buy it, up it goes. Lower close, buy it, up it goes. See? Lower close again, buy it, up it goes. Okay? Okay. So you had one little loser here probably. I don't think it would have hit your target. And you had a winner here and a winner here. Okay? Let's move on now to the euro. It had, oh no, see, it doesn't have that same trade as the pound. Look at that. And there's no divergence here either. Oh no, 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 no. See, sometimes it's hard to see. This is hard to see hidden divergence, okay? It doesn't look like a setup, but it is. It is, man. Look, let me show you. Look, look. Right freaking there, man. Oh, I hate these ones that you can't see them. These are the ones I still struggle with today, and I told you that. Like, if you want to trade divergence and you want to pick up a copy of my course, okay, I got to tell it to you. You got the trades, right, that we just looked at, you know, hold on, let me go back to the pound, okay? The low and the lower low trades, buy them, or the high and the higher high trades to sell. Those are so easy to find them. So don't think it's difficult. They're really easy to find. And how it's all explained in my course, you'll understand it. And I've wrote a course that is very basic and simple and easy to follow. It's not something confusing, full of fluff. I don't sell fluff, okay? I don't recommend fluff either. You know, if you've ever bought and, you know, paid for a trading system or method that it's like 300 pages long and it's full of so much crap, by the end of you reading it, you've already forgotten 90% of what you read. You can't use that shit to trade with. You got to have something simple and directly to the point. My manual is 40 pages of pure trading goodness. So I assure you, you will not be baffled with a bunch of bullshit. I cut out all the fluff, okay? So anyway, I just wanted to make that clear that it's very easy to see the high and higher high trades or the double top trades and the low and the lower low trades and the double bottom trades. They're easy to find. So there's 4 different setups right there that you can use until you slowly learn the hidden divergence setups, okay? Because I'm not lying to you. It took me years to master that. And still to this day, I still miss some. You can't always see them. You can't always find them, okay? Okay. So, you would have got in right on the opening of that candle, right there. And up to here on the euro, 38 points. That's pretty good. And then over here, a low and a lower low, see, but no, it's not divergent. There was no trade setup there. So our first trade setup, I'll show you. It was right here. Lower close in an uptrend, buy it, up it goes. See that? Yeah, man. There was your trade right there. So if you bought it right on the opening of there, you had a potential of 45 points on the euro, okay? So you had one trade over here, hidden divergence. It was good for 38 points. Total max potential. Doesn't mean you would have got 38 points or 45 points, okay? I'm just showing you the max potential that it made, okay? Okay, so let's take a look at our last instrument of the day, and that's oil. And they're shooting it down again, the bastards. That's what they're selling off of. The main pivot of the day. Okay, what do we have here? Do we have divergence down here? Oh, we do, we do. We definitely do. Let me show you. So tired today, I'm sorry. That's divergence if I ever did see it. Right there. And you would have got in the trade right here. See this candle closing up here? The cross was valid. Because you see how, let me make it bigger. You see how when this closed, this stayed up there? That means it was the entry point right there on the opening of this candle. If you waited for a pullback for a better price to get in, you would have got in right when it closed. Okay? Sorry, something came in my mind there. I was thinking about something. Okay, so you would have got in right here. So your max point potential was 89 points or ticks. Okay. And we have one more trade. It's right here. Let's draw it to there and draw it to here. Just put it on top. See right there? Yeah, that's it. Right there. There's the trade. Second trade of today. So you would have got long there, and your max point potential so far, 82 points. Look at that, baby! Woo! Had some beautiful trades today, ladies and gentlemen. Some beautiful trades. So, once again, this is Jason Sweezy here, and I love to trade divergence for one very simplistic reason. It works. I show you that it works every day of the week. By the way, I just wanted to say this is my 101 video since I started this stream. This channel, I should say. I did have a stream back in January, February, and March where I was live, you know, like the rest of these guys, right? On Streamlabs or whatever you call it. But nobody seemed to be interested in my way of trading. So I'm just being honest with you. I guess they're all trading ICT or something. I don't know. Or maybe Patrick Wieland or one of those guys. Or the lady. I can't remember her name. Anyway, so I gave it up. But I started again 5 months ago or so. And this is my 101 video. Okay? And I enjoy doing these videos each day because I want to teach people, right? I love to teach. My father, here's some information. My father was a English teacher in his day in school. So I guess I got this teaching ability from my dad. So there you have it. So anyway, thanks for listening. Thanks for watching. And if you could be so kind to hit the like button and subscribe. Because it's free to like and it's free to subscribe. If you want to. Okay? Okay, you guys have a great day. For the ladies, you have a wonderful day. Good luck and good trading.